All right, on the part 1, we left off here on number 3, right? Cleaning up your report. And as you see the main bullets here, we definitely want to review our credit reports, understand how to read them. Reading your credit report is not difficult, okay? It just takes practice like anything else, like the video games we play, like the credit card accounts we set up online, or the bank accounts, or the way we work with Venmo or YouTube or Facebook or Cash App. Doesn't take any more practice and learning than that. So we should be able to take advantage of the time that we have while we're working on our credit to learn about our credit. Very important. All right, you want to work to eliminate late payments, as late payments are the number one thing to hurt your credit score. Number one thing to hurt your score is a late pay. Usually you lose 50 to 100 points. I have here 50 to 80. Just trying to be, trying to be reasonable on some of the minimums I see out there. I often see people lose 50 to 100 points just through experience. Late payments do serious damage to your credit report, people. But if you slipped up just once, there may be hope, especially if you have a long or good relationship with the creditor. You'll have to keep at it. You'll have to continue to make your payments on time as one of your greatest priorities in your life. Borrow money if you have to make your payments on time. Pay the minimums on your credit cards. Do what you have to do if you're trying to keep your credit in good shape. Do not allow a late payment to hit, because it can technically hurt you for 6 to 12 months. All right, a late payment is going to really do damage to your credit score and your history, because if you're trying to get loans, those lenders are saying to you, hey, you look like you're in trouble right now, so we can't give you money until you clear up your payments, until you show us that you're able to handle it. Isn't that what credit is for? I talk to a lot of customers and they're very upset and they consider it unfair the way they're treated behind their credit. But one thing is for sure, whenever you buy something, you're making an agreement. You have to read that agreement and you have to adhere to that agreement. And if you decide that you're going to be late or you're going to return the car, then be willing to take, the consequences that come with that. You're going to have to deal with that. Either you're going to have to wait a long time to get that off your credit, come up with money to pay it off, or you're going to have to get into a credit repair program and have those types of items removed. You'll see here in the first bullet that it does say you can ask your creditor and persuade them for a goodwill letter to remove a late payment. This is extremely rare. You're going to have a very solid relationship, maybe spending a lot of money with the lender, and having perfect accounts with in other areas for them to be willing to do that. I've tried goodwill letters. I don't promise people that late pays can be removed unless they're actually incorrect, right? Accurate late pays are almost impossible to remove. I hear companies all the time say they can do it. I watch YouTube too. I have a couple of people that I follow for education and for learning that are really credible, and I've done this for years, and I still don't see a lot of people that are able to remove late pays on open accounts. It's extremely rare. So your best bet is to build around it. Since it's so rare, you'll need to build past the late pays by being on time for that 6 to 12 months. And technically, it's more like 9 to 12 months to get back the points that you lost. But you get a lot of points back that you lose after 6 months of being paid on time. You'll gain your points back little by little. Okay, so just keep making those payments. And we talked about how many points you lose there, usually around 50 to 80 plus points. So make sure this never happens. Make that your number one goal, never to be late. All right, aggressively pay your balances, people. Go ahead and make whatever you get on credit very important in your life. The Fair Isaac company, you may know as FICO, says that about 30% of your credit score is based on how much you owe on your credit revolving balances. Revolving balances, again, are credit cards, credit lines, and charge cards. Charge cards being cards you can only use at the store, like Fingerhut, Walmart, Belk, JCPenney. Credit lines are given by banks. They're just lines of credit that you can use. You can charge up, bring them down. All right. A key best practice for building credit is to, let me go back up here and just finish this. The portion of your score considers two things. That portion of your score, the total amount you owe and your available credit line. So paying down balances is extremely important, right? So make sure you do that. Keep those balances paid down on your revolving credit. A key practice for building credit is to forget about the minimum payment. It's better to pay as much as you can, as often as you can. You can make more than one payment during the same pay period. If raising your credit score is top priority, you may wish to consider a second job. How about that, people? How about getting a second job and using that to just save the money to do the things you want, get out of the problems you want, build your credit up? I personally worked 2 jobs for 20 years, this business and other jobs, which were mostly work-at-home jobs and things like that, to supplement things like child support and things like my kids' education, college. So these kind of things you have to do sometimes, right? Sometimes you have to get a second job, but not just to spend the money, but to save the money, or to put the money in a bank account so you can save for a down payment, right? What's wrong with that? We should do these things. So don't be too good to get a second job just to reach your goals. The faster you can get to zero balances on those credit lines, the higher your credit score is going to be. So if you have to do that just to pay down bills, do it. It won't last forever. If you pay for everything with a credit card and get close to or hit your limit before paying off the full credit card balance each month, this is really a negative thing, as people who use rewards cards sometimes do. Consider paying twice a month instead of once. You can pay on your cards multiple times, right? Otherwise, your credit report may consistently show you at your credit limit, which is, besides being late, the #1 thing to hurt your credit score. We don't need this. You guys don't want this. All right? Now, manage your credit card utilization. So we're talking about that. We're just continuing the same topic here. And that's the portion of the available credit that's used up, and that's called your credit utilization, based on the credit card amount that you have, right? Now, it matters a lot to keep your that section of your credit score healthy. Experts say to avoid more than 30%. I don't say that. I always tell people the same thing. If I advise my clients to stay under 30%, they will dance all over 30% and be at 31, 32, 35, 40. So you really want to keep your balances under 20 to 25%. Now, people with excellent credit keep their balances at 0. Now, I made a video that tells you how to, properly use your credit card due date and your statement date so things don't report. I'll give you just a brief statement here on that. When your credit card is due, you have to continue to leave the card alone. Don't use the card. Don't add anything to the card until the statement closes. It's up to you to find out the difference in those dates. It's usually 3 to 5 days. So your due date today is let's say today is the 14th, which is Monday, February 14th. Normally a card is going to be due, if it's due on the 14th, the statement is going to close in 3 to 5 days. So somewhere around Thursday or Friday. So when you pay your bill, you should not use that card or touch that card until after, not on the closing date, but after the closing date. Then it will report with the low balance that you had on the card. You can max your card out right after that if you want, as long as you pay it off by the statement closing date on the next month. I don't recommend this because it gets out of hand if you do that all the time. It's like getting a payday loan and borrowing money every time you get it and paying it back. Every time you get paid, you got to pay back what you borrowed, and this is just not a cycle that you want to get on. If you can't afford to pay down the balance, or you want an extra boost to your score, there are other things you can do. For example, one of the best ways to build your credit is to seek an increase in your credit limit. That's going to drop your utilization. Like, for example, let's say you have a $500 credit limit and a $300 balance. Your utilization is 60%. But if you get a credit line increase and they bring it up to $1,000, now it's back down to 30%. So that's going to help you, right? Credit card limit increases, technically, I got to go back on that, but credit card limit increases technically raise your score every time. So every time you get a credit limit increase, you're going to raise your score. That's another thing. Ask your credit card providers, including your charge cards, for limit increases every 6 months. Every 6 months, ask for a limit increase. Some of your cards don't want to do that, and they have other policies. But you find out what their policy is, and you see what it takes to get a credit line increase every time it's available. The same thing happens if you open a new credit card. So if you, based on the same scenario, if you had $500 credit limit and you open a new credit card and that was also $500, that's also going to bring your ratio down. I think debt to credit ratio is a little bit of a difficult subject to tackle in an unrelated video. So check my video. I have a video that's already out that talks about debt to credit ratio, talks about the utilization. I believe it's titled, "When Can I Use My Card, after I pay the bill?" All right. So you definitely want to look at that and look at some of these methods too. Now we're at 10 minutes, so we'll try to close it out here. We're on number 8, resolve accounts in collections. So credit repair is going to be good help there, right? You're going to get the ability to get a lot of these things off your credit without having to pay them. If an account is turned over to collection agency, though, it's a big red flag to lenders. You'll want to get those paid ASAP, but you may not want to just send a check for the balance, because that alone may not help your credit much, because paying off a credit account does not cause it to be removed from your credit. I'm going to say that again. I get a lot of people who think this. Paying off a collection or a credit account or a repo, it doesn't matter what it is if it's negative. Paying off the balance does not remove it from your credit. It still stays on your credit, just has to show a zero balance. So that's why credit repair is so important, because you want to get these things off your credit. So instead, reach out to the collection agency. Make sure you get something in writing before you pay a collection. Never pay a collection if you don't have it in writing. Okay? And if you're one of my clients, you want to get with me if you're concerned about that. If you don't know whether this is a legitimate company, get with me, show me the proof, so I can validate that for you. That's a free service. There is something called a goodwill deletion in the collection arena, but you can forget about that, people. No one's going to remove a deletion for you unless you do what's called a pay for delete. So you can literally make an arrangement with the collection agency to delete the account once it's paid, and they will give you that in writing. If they do not do that, do not trust that they'll remove the account. They'll have to give you that in writing, or you cannot trust that. Now, there are some companies who do that. There are some companies whose policy is not to do that. So every company, every collection agency is not going to be willing to give you a goodwill deletion, but it's never going to hurt to try. New collections drop your score significantly. In my experience, and that says Experian, but it should be experience, it's 40 to 80 points when they appear in your report. I get a lot of people that call me and say, "Hey, my score went down 40 points, 50 points. And we take a look and we say, "Oh, unfortunately, a new collection has popped up on your credit. So some outstanding bill that you had has found you and they've caught up with you." So this happens. Anytime that happens and you are a client, we'll include that in our cycle of disputes. All right, until recently, only borrowing. The 8th option here is get credit for more of what you're paying. So they're talking about things like Experian Boost, I'll make this short, which allows you to put your utilities or anything you pay monthly out of your bank account. That's the key. It has to come through your bank account. So this doesn't work for everyone. And it does also, only work for Experian. They're the only ones who do that type of program. But other ways you can get things on your credit is with furniture accounts, right? Sometimes they give you accounts at the dentist or the doctor with Care Credit, and they'll give you credit cards or credit lines to pay for your health care. Sometimes they'll give you a credit card to pay for your auto expenses, your tires, or your engine goes bad, or you have a really expensive transmission replacement or something, and it costs a few thousand, and some of these companies will actually give you a credit line for that. So keep those in mind. Those are good ways to build your credit. So the takeaway here is that good credit is like trust. We have to think about credit for what it is. It takes a long time to establish it, but you can lose trust in the blink of an eye. You can have one thing hit your credit, and now your creditors don't want to deal with you. But you can make a long credit building process shorter by developing a strategic plan and sticking to it. Get help. That's what we're here for. If you're ready to build your credit score now, act on these 7 best ways to build your credit and sit back and watch it climb. Just stick to it. Also keep in mind that you have to put on your big boy and big girl pants and start to become responsible for your credit. Be responsible for yourself. Now, I say things like that, and I'm a tough love kind of guy, okay? That's how I raise my kids. That's how I deal with my clients. We have to be realistic about what we're doing. If we're responsible for ruining our credit, we have to be responsible for fixing it. So that means we have to stop buying things we can't afford. We have to stop spending money that's bill money on things that are not important. Whatever it is we're doing that is causing us bad credit, we're going to have to stop those bad habits, and we're going to have to create new habits. It's on you how you'll be perceived by your creditors. If you want them to look at you as a good credit risk, take care of your bills. Make sure it's on your credit and those things are showing. Make sure that you don't have errors that are not your fault. A lot of times I meet people and they don't even know there are major errors on their report, or there's fraud, or there's things on their report that somebody else put on there that they don't know about. So it's okay to change your past. Keep your credibility strong. And remember, anyone can have good credit in good time. All you have to do is work on it. Thank you for your time, and I hope you all have a good one.